Welcome back to Talking Markets, everyone. My name is Trevor. I'm here joined with Brian. Brian, how's it going today?
Really well, Trevor. Like a lot of traders, we at Santiment are pretty excited about how the markets have been going, and you have some topics you'll talk about. I think a lot of the boom has been due to the CPI report that I'll get to during my section. But in the meantime, please let me know what kind of topics have been catching your eye.
Yeah, so overall, the market is looking really bullish right now. I mean, the past week, some assets are up. We have FTT, the legendary FTT, up 142%. We have TIA, which is a brand new layer one, up 156%, in the past week. And even in the day, we have assets like, for example, DYDX up close to 20%, which I'll get into in a minute here. And overall, the market is looking really bullish. And, we can also see this through the, funding rates, which you talked about in the last video that we made last week. Overall, the funding rates is kind of showing the sentiment of how the market, perceives, the market to be, right? And so right now, the market is still extremely bullish, as it appears. And, going on to this, we can even see DYDX is up 62% in the past 7 days, which is really crazy to see. And this is actually due to their V4, which is they're basically launching on Cosmos. They're building on the Cosmos SDK. And so they just pretty much announced this and released this. So this was a big thing, a big lead up for DYDX. And I believe that's one of the reasons why it's the top gainer, of the day. Moving on to other news, Poloniex actually just resumed withdrawals after the $100 million hack. So this is, pretty bullish because, Poloniex was actually on pause for a few days after this hack. And a lot of people were kind of, being very skeptical about, them ever, announcing withdrawals again. So this was really good overall for the market, at least to get some closure on this hack and for people to be able to safely withdraw their assets. So yeah, uh, that's pretty much it for me. Brian, what do you have?
Yeah, that's great news about Poloniex, Trevor. I'm glad you brought that up. Obviously, one of the larger exchanges. It's U.S. friendly too, so that's a pretty big news for the top country in the world in terms of crypto trading. And there have been a lot of positive things that we have seen. Obviously, people are still optimistic about the ETFs and the prospect of them getting approved any day, any week now. It's hard to predict. Okay, so we got a little bit of a boost in both the equities and gold departments from a CPI report that showed that inflation was down and the core CPI is at a 2-year low. We saw that equities really surged. They're back up above 4,500. If we go back to 6 months, they have reached back to around the same level they were at in early September, just before the fall here. If you look at this teal line, and you can see how gold has kind of been in close proximity to it, or at least was up until this correlation break. But gold and the S&P both rose, as did crypto, which was starting to slip a little bit. I think that this may be a pretty minor boost in terms of uh, what market cap can be increased in crypto. Crypto is still kind of in this limbo phase where it got a massive boost right here in mid-October, all the way until early November when it finally started to slow down here. But it does appear that there's still a bit of a FOMO uh, hangover from the uh, potential ETF, the one that was officially filed for Ethereum, uh, and it's kind of a continue and wait period for people to see when they're going to be approved. And if it gets stagnant, I think I mentioned this last week on our This Week in Crypto call, people may eventually get impatient if they think this was all kind of a rumor and it wasn't actually true. It is very much true that things have been filed, but the SEC is known to take its time in making a big decision like this, especially when they know it's going to have a big impact on the markets. So we're still in this hangover phase for crypto. but the CPI report did inject a little bit of life into it when it came down yesterday. I also want to mention, if we look at these two lines, just for simplicity, I'll get rid of the others. We look at Bitcoin, it is still much lower than where it was just 2 weeks ago in late October. You can see it had its last big spike here 1 week ago on November 8th, and then had a big profit take drop just as it was hitting its local top above 37.3K. So the sharks and whales are holding, I wouldn't say substantially lower, but notably lower than they were holding just a week ago, and especially 2 weeks ago when we were here, 3 weeks ago. Meanwhile, we are seeing more tether accumulation, which is a good sign. It was getting pretty concerning seeing the drop between September 30th all the way up until November 8th, but at least over the past week, we're starting to see what traders often refer to as more dry powder coming back in, meaning there's more buying power for future crypto purchases compared to a week ago from sharks and whales, and that is a very solid sign. Ideally, we would just like to see this Bitcoin line pick up a bit, showing there's more Bitcoin being held and more stable coins being held. That's usually the ideal recipe for market cap gains. Besides that, I wanted to show off our new trending token insight, which I'll pull up here. So if you go to insights.santiment.net, you can check out an article we released just a couple days ago called "Can You Trade on Trending Crypto Tokens?" And our findings are quite fascinating. Typically with tokens that are seeing a rise in price, which are often the reasons that a token becomes trending in the first place, more than anything news related. Tokens are being talked about if it has a big decoupling from the market, goes up 20% while the rest of the markets are flat, or goes up 80% when the rest of the markets are up 20%, like we saw for a lot of the last couple weeks. That is when it'll be a top token, particularly a top 3 token. So we looked at when an asset is a top 3 riser, meaning its percentage of discussion is among the top assets that have risen compared to its normal resting average. That means that it is basically hitting the mainstream, and casual traders are suddenly talking about an asset that is otherwise not talked about that often. And what we have discovered is that when this token hits this scenario where it's pumping and it's a top 3 trending, it actually retraces 72% of the time over the next 2 weeks. So theoretically, if you were to short without knowing anything about the asset other than the fact that it is pumping, like this in this example for Numeraire, you will be successful 72% of the time by shorting the asset over the next 2 weeks. And that's a pretty big story in my opinion, because we have something that tangibly shows that a trading strategy can be used with overwhelming success. And 72% is a pretty high number if you are just making a simple strategy and putting it to use anytime a certain scenario comes to fruition. So I definitely recommend you guys check this out. We definitely inject some humor into it, but a lot of data and raw numbers to go along with it for you analytically inclined folks out there. But
I think it's interesting because it kind of goes to show this like contrarian overbought, strategy. So it's cool that you guys came up with this.
Yeah, 100%. I mean, the thing that we have always perpetuated on Santiment is prices move in the opposite direction of the crowd's expectation. So if everyone is suddenly talking about the markets being bullish, that generally means we are more likely to top very soon. And it's kind of a microcosm when you look at one specific asset. If people suddenly say Dogecoin is the path for everyone to become wealthy, that is usually right around the time where Dogecoin starts turning around and makes a lot of people poor, and vice versa. If everyone talks about XRP, I'm just, thinking about something that has been very polarizing over the last few years. If they say XRP is a scam, we're more likely to see XRP break out and become one of the best performing assets, assuming there really is that much sentiment toward it, and you're seeing people, smaller traders selling it off. That's the ideal recipe for large sharks and whales to scoop it up at those lower prices and pump the market cap up. So, um, trending tokens is a great reflection of how much an asset is being talked about, whether it's being talked about because of pumping prices, and assuming it is, you are much more likely, from an objective standpoint, as we're now learning mathematically here, to see that prices are going to decline in the upcoming couple of weeks. So I'm excited to see what our community thinks about this and what all of you watching this video think about it. And feel free to put it to the test. Understand that it's at your own risk. 72% is not 100%, but you may find it to be useful for your trading strategy, and we look forward to hearing what you think about it. Other than that, I think we've covered the main topics of the past week. And, Trevor, as always, I love your thoughts on where we're at in the markets. And I'm excited to see how the second half of November shapes up.
I also just want to tie this in. I've made a lot of different videos about different crypto projects. One thing I've noticed too is that the ones that got the most popular or got the most amount of views within, a certain amount of days, usually that asset was in for, a bit of a reversal or correction typically. So it's kind of interesting because it kind of goes onto this contrarian type of research you guys came up with.
Yeah, I think that's a great point. I mean, if nothing else, most traders who have been around the crypto sector for at least a couple of years have realized if you just follow what the mainstream crowd believes, you get burned a lot. Because the
Yeah.
average trader, it may seem like it's 50-50 between people who profit and people who lose. Most people lose if they're trading on a daily basis. The people who make money are those who hodl, meaning they're not really trading much at all, or they're looking at what the common sentiment is at any given time and doing the opposite, or at least not following the same tracks.
It's basically like the inverse r/cryptocurrency type of
Yeah,
meme, right?
Wall Street
It's the
bets,
same
yeah,
thing.
all of that stuff
Yeah,
where you,
the
you
inverse.
basically do the opposite. Jim Cramer,
Yeah,
another
yeah,
one.
exactly.
So for
Yeah.
sure, I think people joke about how they're inverse correlations, but when you're actually able to see the overall amount of social volume of a certain topic by like just combining all of the stuff on Wall Street bets, r/cryptocurrency, even mentions from Jim Cramer forums, you can tangibly see like how much something is being talked about and whether people are bullish or bearish toward it on sentiment. So I look, whether I was part of sentiment or not, I'd really recommend just checking out that data and seeing if it could help your strategy.
Yeah. Yeah. So I think you guys should definitely check it out. And that'll be it for this video. We'll talk pretty soon, Brian. And yeah, that's it for this one.
You bet. Thanks so much, Trevor. Talk to everybody soon.